All right, welcome back to the Big Long here. Just want to go over something real quick from yesterday's FOMC meeting.
Because they're violating laws, but I can't speak to our confidential supervisory assessments of any individual bank.
Thank you. Now we'll go to Michael Derby.
Thank you for taking my question. You noted earlier in the press conference that you weren't aware of the trading activity of the Boston and Dallas Fed Bank presidents. As you know, those all 12 regional Fed Bank presidents just went through the renomination process earlier this year, and Governor Brainerd described it as a rigorous process at the time. So I want to know, did anybody at the board level know about the stock trading activity? And going forward, do you still have confidence in the Dallas and Boston Fed Bank presidents to do their job?
So these, I don't need to tell you, people file these reports annually, and I think they were just quite recently filed for 2020. So I don't have any reason to think people at the board would have known about particular trading that's going on. They will see that there are people at the Fed who see the see the trading reports when they're when they're annually um, filed. In terms of having confidence in that sort of thing, I think no one is happy. No one on the FOMC is happy to be in this situation, to be having these questions raised. It's something we take very, very seriously. This is an important moment for the Fed, and I'm determined that we will rise to the moment and handle it in ways that will stand up over time. I'm very reluctant to get ahead of the process and speculate, though, about different things. And when we have things to announce, we'll go ahead and do that. But that's really what I have for today.
One small follow-up. I mean, I know you didn't have the 2020 forms in hand, but you would have had past year forms in hand. And at least in the case of like the Dallas disclosure forms, similar trading activity was shown in years past. So that in theory could have been something that came up in the renomination process.
So that's a good question. So the 5-year review that we do under this unusual provision of law, where all of the Reserve Bank presidents are reviewed for reappointment at the same time every 5 years. That is really a broad review about their leadership of the institution, their performance on the FOMC, all of those things. And if there were a concern, a public concern or a private concern about something that someone had done, we wouldn't wait for the 5-year. We wouldn't wait that day.
All right, so right off the bat, he did not know. He pretty much got caught in line,
What are we doing to get our fiscal house in order?
acting like he did not know. I mean, the Fed has bought MBSs since March 5th of 2020. So the fact that this has been going on since March 5th of 2020, and he stated that he had the 2020 trading files. I mean, come on, how don't you know, or how don't other people know? And like he stated, he checked with the ethics people and stuff like that. Now, um, could he have had those holdings prior to what has happened and then not sold them? Yeah, but he has sold them now because he knows what is about to happen. And just like how yesterday they moved um, interest rates hiking up back to December 2022. So that'll be interesting to see how that goes. As right now, you see futures are up right now. Everything is moving. Um, the implied open, I mean, looking pretty good. We have about an hour and 21 minutes until the open. So that is something that I am paying attention to as the job data comes out, I believe at 8:30. This is going to be a quick stream. So today is Thursday the 24th, and we have, continuous jobless claims, initial, the manufacturing PMI, as well as services PMI. So initial, let's go with, we'll start with continuous jobless claims, right? So continuing jobless claims haven't really like been crazy other than back in, I think, let's see where we actually peaked. Wow. So if I just keep on going back, ooh, it just gets worse and worse. So we have come a long way, and continuing jobless claims, just so that you could see as well, measures the number of unemployed individuals who are receiving unemployment insurance benefits. So what has happened during the past, right, which makes sense, is these unemployment benefits got extended twice. So now what you were seeing in the past, right? You had a huge like wow. So the fact that we are in the double digits of continuous jobless claims is crazy, but we have come a long way since then, and this is because the unemployment benefits are over with, right? So the fact that we are going down is a good sign. People are entering the job market, but this is still a decent number to deal with, as you could see every quarter. Yeah, pretty much every quarter we are going down. So that's a good sign. But this today's will be very eye-opening to see where we're at since things have changed. Now, initial jobless claims measures the number of employees who filed for unemployment insurance for the first time during the past week. So this is like a week-to-week economic data that comes out. So this just shows pretty much that stepping stone to what you're leading towards when it comes to unemployment rate, jobs openings, and obviously ADP employment numbers. So this number has been a little spotty. As you can see, just in July, right, we shot back up to 420,000. So since then, it seems as we did possibly peak. Now, if we want to go back, the number's just going to get larger. So I'm going to stay right relative from pretty much the summertime, from June to now. So last week's was 310, and now that's better, right? Because you want less people that are putting in jobless claims. But then September 16th, sorry, 2 weeks ago it was 310. Then last week it was 332. So it shot up about 2K over what was forecasted. But from the previous, it says 312, so that's probably the revised version. This is probably the preliminary. So the fact that it rose 20K is a little alarming, because unemployment benefits ended right after this week, and we did jump down 30K, but then 22K came right back into it. So what this is telling me is either A, people are quitting their jobs because they're overworked, they're not making as much money as they should be, they're very cautious about COVID in the shape of the work world right now. It seems to me that every single company out there is totally different. Now, you might have a fully remote position, a mandatory face-to-face position, a hybrid position. So, with that being said, these vaccine mandates are becoming more and more of a big thing. And I feel like that could also be driving out some employees from the workforce. So that is what I'm starting to think is it's just the human mind, right? Why if you could find if there's 10 point freaking 1 million jobs opening and you're not happy with your job, why should you stay there? So maybe people are just realizing that they don't want to put up with certain things anymore at their current job and they are still leaving because now as the vaccine is obviously approved by the FDA and booster got approved for people over the age of 65, things could get a little carried away with these mandates that companies are imposing. So that is a key thing that I look at when I'm looking at the jobless claims is that every week this pretty much showed you the direction that we're going in for unemployment as well as the ADP employment report. So be mindful of that. Um, it might affect the markets a little bit, but then again, who knows? Because after the FOMC meeting yesterday and the Fed remaining rates unchanged and not tapering at this moment, now that's a pretty good sign for the short term. So let's get into some stocks. All right, so we got the S&P right now. So yesterday we had a green candle. Now I said it would be very good if we recapture that moving average as well as close above Monday's open. We didn't get there, but we did hit a high of that. So that was a good sign of that momentum of buying the dip and keeping the bull run going. So something to be mindful about is there's a handful of individual stocks that are actually down somewhere between 10 to 15%, right? And the indexes necessarily aren't down that much. So one of the key things that I'm mindful of is the sentiment. And after yesterday, real quick, the sentiment right now in the options market, equities are way down now, 0.48. So they hit a 52-week high of 0.77. So this told me that maybe people actually thought Powell and the FOMC meeting they were going to change their stance on everything at the moment, but they didn't. And then the total put to call ratio actually increased. So that is something to be mindful about because the indexes did drop a little bit, but still very bearish on this side. So unusual options activity, right? So MRIN, that just looking for. So MRIN, I believe popped yesterday, and it might be down pre-market today, but MRIN is a software company that's cloud-based, and pretty much it's digital software. And did they come out with any news? Oh, MRIN. They're the company that came out with a partnership with Google to develop an enterprise technology software platform. So that is actually pretty big because Marin Software jumped 75% in the morning, touching $10.50 a share. So be mindful, the company is still down about 60% from its year-to-date high in early July. So that's something that we'll touch on. But I just wanted to get over that because they're expecting this to really rise on the October 15th, right? Expiration. And then you got MGM. So another thing with MGM is I believe they're having conversations, something with the sports betting world or just gambling in general. And this is because of the potential merger or acquisition of DraftKings and Entain. So MGM has a 50-50 partnership with Entain. So that is why it pretty much was correlated to that. And Peloton was down yesterday, and I'm not exactly sure why that was down. I'm not a fan of Peloton. I think Peloton's nothing special. I think they just got lucky with COVID. But then again, what has happened is their treadmills, right? They had that recall, and that crushed their stock. And from their high, right, they're down about 45%. And there wasn't really, okay, so yeah, there really wasn't any news on Peloton on why it's fallen. It just was. So I'm not really a fan of Peloton. I think the regular gyms are better, but I am more of a fan of the rowers. I think that is better than the Peloton, and that's just my opinion. Everyone has their own opinions, and body works differently with everyone in terms of working out. So that being said, I'm not an investor in Peloton. So the most active traded options again was Apple, Tesla, Facebook, SoFi. That's becoming a little hot talked about stock in the social media world, like Reddit. AMC, another one, AMC loaded. Val, not too sure. Lucid Motors. Now Lucid Motors did drop a little bit. I did say we need to watch for that support level, and it didn't break through. And then we have Nvidia that is back in the game. So the options volume actually was higher than the previous days. And then the put to call volume is still bullish, but we do have Tesla inching up towards the bearish side. So that's just something to be mindful of. As the highest volatility, one of them is ATER, and well, two of them ATER for calls at the strike of $5.50 as well as 35. So that is something to be mindful of, as that can make the stock price move very sharply. And I will touch upon ATER in just a minute. That is a stock that I brought up yesterday because of a short squeeze potential. So now, as we proceed, we have, I believe, futures are up still. Yep. All right. So we held this support line right here, which that is a good sign, and the S&P. So now what I'm going to do is do this. And that's because this is key, right, at this very moment in time. Because if we do past this, we will be retouching down here. And that's just that. This has to hold as the next support level right around here because of that. But if you really want to get technical, I mean, this is a daily chart. I would look at the weekly and the monthly. So yeah, right here, actually, let's just move that moment in time. So we have support right around here, which is actually showing past support. So the fact that it's showing actual past support around here is actually a good sign. And as you can see, this is in line with the wicks, right? Now, if I was here, I would have went by, the body of the candle. If I was here, I would have went by the wick, just because the wick would give you more of where the price could be pushed towards. And that's how I kind of go about that. So right on the weekly chart, we have this holding support. Now we are red, but we need to recapture that trade line. And since I believe last September, right? Yep, September 21st, right, was the start of a new week. And this was the first candle that dipped below the trade line. But this is telling me, this is a bullish candle. So even though we dipped below the trade line, let's zoom in a little bit. We closed above the 30-day weighted average, and we touched, the high was 3323. So we actually went right above that trade line, or right in line with it. And the fact that it was green, this is telling me that a breakout will happen. And then as you can see, again, coming back down to that 30-day weighted average, we held it, and then it was a blast from the past, and it was a big rebound, and then up and away ever since that. So kind of ironic how we haven't seen a candle dip below the trade line for some time until a year later. So I'm being mindful about that, because this does not show strength at this moment in time. So now what I would like to do is zoom in on the 30-minute time frame. So what we have to look for is the consolidation right around 14, which is 2 o'clock. The Fed meeting minutes came out. Markets took it in stride, and then as you could see, we consolidated above Tuesday's open and close, as well as Monday's open and close. Now we opened at 440, and we did go above those each time. So even though we closed above it, the consolidation of 2 hours above those 2 previous days is a good sign. Now once that came out, right, we touched the trade line here, and then we bounced up, and we did have a little pullback between here, but that is something that you just have to take with a grain of salt, because stocks are supposed to pull back. So this consolidating period, right, this I wouldn't be too sure on. The only thing is that we closed at 4353 here, and here we closed at 4357. So we didn't close above this day, and that to me doesn't show true strength. But now this shows true strength, and then today we will see what happens. So as the SPY gets going, let me zoom out. So the same exact thing, the SPY and the SPX kind of have the same thing going. And I said we needed to hold yesterday's close, and that was pretty much the low, was yesterday's close. Now we hit a low of 433.75, and Tuesday's low was 433.07. So the fact that we did come around Monday's close, yesterday's low, as well as the close, and then we did touch there again yesterday, but we closed above it. So that's to me is a strong dip buy, as right now we are up about what, $2.14. So now if I zoom back out to the weekly, just to give you some taste. So this is the pullback zone in between here, and the space is how strong this uptrend is. So the fact we had this pullback here, right, and we had this support line, right now it's holding above that 20 and 30 day moving average. So this is where the strength comes from. We closed above it. So to me, I'm looking for us to recapture what was this? So Friday. Now this is what you need to be mindful of. So I'm looking for us to recapture Friday's close. Now Friday's close was 441, and we're at 440, about 440 and 50 cents. So if we do reach and close above Friday's close, that's going to be a sign as the bull market is still here to stay, and I'm all for that. That's what I'm looking for, and that is why I'm being patient. So looking for that to recapture Friday's close. So now let's go to the NASDAQ. So NASDAQ, same thing. We slipped below the 50-day moving average, but then we recaptured that, and we closed right at it. So to me, that's a sign of a strong buy, because right now, as futures are up, looking at us to recapture Friday's low and hopefully close above that low. So if we recapture that, we're looking pretty good. So that's something I want to be mindful about, as the Fed's rate remains unchanged, interest rates are remaining low. So I could see the NASDAQ stocks as well as the triple Qs still flying high. And as you can see, we are hitting 371 at the moment, and 371 is pretty much right at this trade line. So it looks like we're going to open at the trade line and recapture that. And now what I want to look for is closing over Friday's close. So that is going to be the key spot that we are looking at today as we await. Oh, it actually came out. Let me see. And here we go. Initial jobless claims. I told you it was going to come out hotter. So, sheesh. So what is going on here? Now, this to me, I told you we were gonna peak. I think this has a lot to do with COVID vaccination mandates in the business world, but I could be wrong. Maybe this has to do with overworking, wages not increasing depending on where you're working, and yeah. So I don't know. Gonna have to look more into the details of this, because initial continuous jobless claims peaked, well, jumped up too. And we haven't seen 2,800 since August. So this is another thing that we need to be mindful on. Yeah, but markets are pretty much taking it in stride. So we'll get back into it. So yeah, so since I just talked, I mean, we just popped up a few cents, nothing crazy. So again, looking at the triple Qs, yesterday, same exact thing as the SPY. At 2 o'clock, markets took everything that Powell said in stride. And this is signaling a strong consolidation here, considering where we were the past 2 days. So NASDAQ actually closed above the past 2 days. So to me, that is a strong pull. I mean, a strong rebound for a dip buy. And right now, you could see that the strength between this movement of yesterday was pretty strong, and we did have a pullback, but pullbacks are always necessary when you're looking at intraday. It happens. So once we get on our way here with market open, looking at us to recapture Friday's close. Now what I would like to do is get into ATER since I brought that up. So let me zoom out again. Alright, so we're looking at the daily chart. Yesterday we hit a low of Tuesday's high. So 1406 became yesterday's low, which was 1401. And we hit a high of 1693, which on this red day was, I believe, the open, around the open and the high. Oh, I'm sorry. Yeah, around the open and the high of Tuesday's, the 14th. So this was last week. That is showing a strong bull move, and as you can see, the space on the daily chart is big, and we did cross that 50-day moving average. Now, when I have that 20-day moving average crossing over the 50, that is confirming that this is going to be a bull move and an uptrend continuation. So in this, what I would look for is, as soon as the 20-day crosses, would be a pullback to touch that 20-day, and that would signal a buying opportunity as long as it closes above that trade line. That is how I would do that. So now we're upwards, and today it looks like we are going to pull back just a little bit, and I'll zoom out and I'll look at the 15-minute because this is a trade. The other ones are just analysis on the market. So on the 15-minute time frame, you could see that we have just a continuing upwards trend. So I'm looking for that to continue. As you could see, the pre-market, after market volume has been the same consistency. In terms of before a huge breakout happens, kind of sell off in pre-market hours. Yesterday we took off in aftermarket hours, and we hit a high of, I believe, like 1876, almost 19. Yeah, 1876. So to me, that's a huge jump in the after hours market, signaling a bullish momentum. So even though I take this with a grain of salt right now, this is just showing where the momentum is at that point in time. Not a lot of volume, as you can see. Look at this compared to this. So this is why you need to take everything with a grain of salt, because if we were here, right, so we closed at $11.39. We went high, and then we broke out and went lower, but then market open and we went high and then consolidated higher. So that's the type of movement you want to see, is you want to see the consolidation of a few hours above yesterday's close, and that's what is going to signify a strong upwards movement. And as you can see here, right, now we actually opened high, didn't have that much movement until like 2 hours, an hour before market close, and we really went higher at the end of the day, and the volume was strong there. So this is a good strong play at this point in time. Now I'm looking for us to retest the 15 the 23.6 fib line before making a move higher. That's just me. We might not. We could, honestly, I mean, market could open and this could get flushed with buyers and we could just drive up. But my pullback area right now is at this 23.6 fib line for ATER. So another stock is AMC. I commented on this that I wasn't going to make any plays on this yet, as we are right at the 50-day moving average. We did have a green candle. So right now, looks like AMC is going to gap up, but I am not looking for a play in this anytime soon. I haven't looked into it. I just have alerts everywhere. So if we recapture this 50-day or 200-day moving average on the 30-minute, I mean, that's going to be bullish trend. Right now we are on a downwards trend, but we broke out of that yesterday going into the after hours market. So what I'm looking for is for us to recapture was this Monday's open. So that is the key, where the 20-day moving average is. Now that is going to be a crucial point. As I zoom in here, you should be able, so 30-minute time frame, right? So we actually shot low and then we remained above yesterday's open the entire day, and it was just straight consolidation. It seemed like it was a strong battle between buyers and sellers, and then finally we made a move above the 50-day moving average, and now it looks like we will be opening probably around $41.55. So really looking to recapture Monday's open. We recapture Monday's open at 42.99. That's going to be a good sign. So definitely going to keep that in the back of my pocket. And now what I would like to go over is MRIN. So gapped up high yesterday, recapturing their 50-day moving average, but it closed down. So what that's telling me is there's got to be heavy resistance over here, and probably is when they crossed down in that downwards trend. So zoom out on the weekly. So if we zoom out on the weekly, look at this. See, this is why you have to zoom out. You can't see this stuff. So this was June 28th. Wow. So from June 28th to finally yesterday was a big consolidation period. So if I zoom in, it might not be a good picture, but you could see where we were, right? We've been right around this huge days open for quite some time, and it hit a high of 25 this week. Well, in June 28th. So that is crazy, as this pullback was needed. And then yesterday, obviously, opened at 542 and went as high as $10.88. So this is what happens when a stock makes a move like that. It needs to consolidate lower, and it needs to gain momentum so that everything isn't overbought and more buyers enter it to push it higher. So this is actually on my watch list because of that. And then once we zoom into the 30-day time frame, you could see that it actually took off on the 21st. So after hours it took off, and then yesterday it said nope, see you later. So this could be a cool off period, as this was a nasty move in after hours time. So definitely keeping a look on this, as we do seem like we're going to open lower. So that's just what it's looking like at the moment. Now, the other stock that I want to get into real quick before I gotta go is the one that I've been watching for quite some time. So I actually bought in on Tuesday, the last time I talked about it, because we closed right above that moving average. So to me, that was a bullish sign. Even though yesterday we had a slight pullback, I am expecting us to retest that $10.45 mark to a pretty much 10.75. So I'm looking to get out of this circle, and if we hold, which that's what I'm waiting for, is I'm waiting for us to hold this for a period, because this to me does not signal the strength right now. This gap right here, right now, these gaps are signaling some strength. So I'm waiting for another buy-in opportunity around breaking out of this resistance area. And then as we zoom in on the 30-minute time frame, you could see that we recaptured the previous day's opens and close. So we actually touched, what was this, Friday's close. We regained that. So we have to stay above Friday's close. So I think as long as we stay above Friday's close, this is going to be well worth it. And this is in my long-term portfolio, not a trade. So just be mindful of that. And I think this is going to be a very good long-term investment. So what I would like to get into is Apple again. So I touched upon how if Apple crashes, I think, or all the FANG stocks go down, I think it'll bring the market with it. And yesterday we rose, markets rose. Now you see Apple has the same exact thing as the indexes and ETFs. You see this 30-minute consolidation period. Now it's just like people are like, you know what, I'm gonna buy, and the volume is pretty good too. So this is a strong consolidation period at this point in time, as we do close 145. What was this close? 145.9. So yeah, I mean, we came right around Friday's close, and we closed right around there, and we recaptured the past 2 days opens and closes. So that's a good sign. And if we zoom out to the daily chart, right, Friday was when we actually continued that decline, and that's a good sign that we can recapture that, and hopefully we do today. Friday was the 17th. Yes, right here. Sorry, I was pointing. I don't know why you keep on thinking the 13th is, but the 17th is right here. And so this was the last big red day, right? So the fact that we came right around that and closed, that's a good sign. And we are going to open obviously above that around 147.11. So that's a good open. So we're looking to recapture that, as well as the 50-day moving average, to signify that this is a strong buy rebound. Well, if we don't recapture that, I'm looking at us to retouch the 143, or let's call it 144 range. So I'm bullish on the markets at this point in time. I don't think anything will change it unless the U.S. can't pay the debt, but the House passed the bill already on that to suspend it. So I'm sure they'll be revisiting that at some point in time very shortly, as well as revising things. So who knows what will happen in the near future with that. I do think it's going to be in everything green market today. Maybe besides the um, inflation trades slash at home trades. So we'll be looking for that today, and I'll be back later on to go over the market recap. So thank you for tuning in. Hope you learned something, and go long.